If you're bullish and it's been going up, a 15-minute low underneath that, that sell stops. It's going to run down there, take those, and then you're going to see it trade higher. Even if it fails and just goes to a higher high and never continues after that, that's still tradable. But some of you would think that that's a failure. It didn't keep going up to my target on a higher time frame chart, ICT, so that's a failure. Wrong. Could you get 5 handles out of it? And did you take 5 handles? That's how you start. That's how you build yourself up. That's how you grow. And eventually you do that enough and you start seeing setups that you know you've been here before. Yeah, I can get my 5, but let me take 5 off with half the position and leave a runner. And then you graduate to becoming a 10 handle trader. And you do the same thing for a little while. Let that build up. And then you start seeing this looks like it's one of those setups that gives me a 25, 30 handle run. Let me take off half at 10 and then leave a runner on. And then you start growing into being a 25 or 30 handle trader. But you just can't make a decision cold turkey one day and say, you know what? I've done 12, maybe 15 paper trades, and I've done 2 of these 5 handle with my live account. So I think I'm ready for 50 handle runs. It doesn't work. That doesn't work, folks. That does not work. There's so much that you have to grow into and allow yourself to feel what it feels like to watch your profits go up and down while you're in those trades. I mean, you're talking about something that if you have multiple contracts on, you're likely to see thousands of dollars go up and down in unrealized profit. And the first time you encounter that, the natural impulse is I got to get out right now. This is stressful. All this extra money I'm making that I've never done before is stressful. I got to get the hell out of here. It doesn't sound possible, right? So you should be thinking, well, this is great. This is going to keep making money. The first time you get there, it's scary because you don't want it to go away. You're afraid it's going to go back to zero or turn into a losing trade, which unfortunately in the beginning tends to happen for people that rush to that point. They haven't desensitized themselves to winning because winning is something that you have to get used to. And it doesn't sound right, does it, hearing that? You have to get used to winning. I mean, I could get used to winning real easy. No, when there's money associated with it, it is a very scary thing because now all of a sudden it's, well, think about it like this. If you have a trade and you take a losing trade, then you lose and you take another trade and then you lose and you take a third trade. Now you're down maybe 5%. Now you have analysis paralysis. You second guess everything. And now you know that looks like something you would have traded, but I don't really want to take it. I'm scared. Let's just see if it works. Then it works, and you're thinking, oh man, I should have took that trade. Why didn't I take that trade? Because you have not grown in learning how to do this properly, and you traded too much, you lost too much, because 5% is too much for a new trader. You pushed yourself too far. So you have to let time heal it. That means take a week off. Come on, ICT, man. I'm never going to get to being rich if you keep talking about taking time away from the markets, taking this, taking that. You're not going to be successful if you think like that. You're the problem. You're impatient, you're impulsive, and you're reckless. And that can't be fixed by me. It can't be fixed by any other educator. And no product is going to fix it. No resource, no black box, no mentorships, none of that stuff's going to fix that because you have a problem. And that has to be corrected by you over time, going back to square one. And a lot of people aren't willing to do that. And those same people will always and perpetually fail in everything they do. No matter what approach they use to trading, they're going to fail because they will not accept the facts that they themselves are presenting the catalyst for their failure. They're prolonging their development because they want to do it their way, have it their way, mentorship, have it their way, success story. Everybody wants to be a trailblazer. I get it, folks. I get it. They want to take something and make it their own and let everybody say, wow, here's your flowers, man. You did this and you did that. How about just making money? Who cares where you learned it from? Okay. Who cares how long it took you? Because believe me, when you start making $100,000 a month, you're not gonna give a single fuck what anybody thinks about how you got there, how long it took. You're not gonna care. Even your own time and pressure that you place on yourself will be completely insignificant because once you arrive there, Nobody can take it from you. Nobody can change your mind about what you've done, the decisions you made to get to that point. That's empowerment. All of you can get there, but all of you are the biggest roadblock. You're the barrier. You are. Time is going to be the same for every one of us, but you make it require more time because of the things and decisions and all the factors that you bring into it. Your toxic thinking, your doubts, you're trying to keep up with everybody else. You're trying to measure up to this one, trying to measure up to that one instead of just simply thinking the folks that are making it available to you and using the advice and the conceptual ideas the proper way, not trying to reinvent the wheel. There's so many people out there trying to add to, twist the things that I've taught. And that's not what you're supposed to be doing. You have no idea what they're rooted on. You don't know what the logic is behind it. Remember, I had to take what is really out there that you'll never get your hands on. I had to create a language around it. So that way you can see it in a chart when it looks like this. But there's many times the things that create a breaker, you won't see that idea in the chart, but the same thing's happening. What? Yep. Dark pools. Another Twitter space for another time. So silver bullets, you have a fair value gap setup that's very specific in that 60-minute chart or 60-minute time window. 1 hour. At 10 o'clock to 11 o'clock, you have the lunch hour that runs on stops. Whoever's been making money, that's what it's going to do. It's going to run down there. Even if it reverses in the lunch hour, that's still a trade also. If you can anticipate that drop down, say the market's been going up, London session, New York session. Now you're entering at 11 o'clock to 1 o'clock an hour. You can sell short a 1 minute 2022 model and aim for that 15-minute low. What? Yes. Yes, Virginia. Yes, you can do that. That is a model in and of itself. What's wrong with it? Nothing. It might not fit your appetite. It might not feel like it's something for you. But honey, it pays. It pays the bills. It makes ends meet. And guess what? Car notes get paid with it. Rent gets paid with it. Mortgage payments get paid with it. Vacations get paid with it. Wardrobes get paid with it. Retirement gets paid with it. So what's your excuse? What's holding you back? Something. Something's holding you back. And then you had the PM session, afternoon, between 2 o'clock and 3 o'clock. The same thing you would expect to happen in 10 o'clock to 11 o'clock AM session, silver bullet. Well, look what we have here. Another 60-minute time window. We have to look for stops or inefficiency. Where's the market going? Where's it reaching for? You know, you had that old high that you were aiming for all morning. It didn't get there. We have relative equal highs now across the afternoon. What's it going to reach for? The weekly and daily objective hasn't been met above the marketplace yet. So we're still bullish. Wait for a short-term shift in market structure, 1 minute and 5 minute. Wait for a fair value gap to form between 2 o'clock and 3 o'clock. And then when it drops down into it, when you're bullish, buy it and aim for that intraday high. If it can give you 5 handles, take it there. Leave a runner on and see if you can get to that higher time frame, weekly or daily chart. That's how you trade your afternoon silver bullet. Simple. Real simple. There's a whole lot more things you can add to it to supercharge it, though. But that's the easiest, simplest little approach to that model being there every single day. Even in choppy days, it's there. Oh, it's there. Every day. Then you have the last hour trading, 3 o'clock to 4 o'clock. I've taught you several macros that exist in that hour. And now we're talking about the extreme of the daily range for indices. You're not trying to trade Forex back then at this time. At 1 o'clock in the afternoon, that's it. You're done for Forex. Don't touch it after that. I don't care how much you see it do this and do that. You don't trade it. In London close between 10 o'clock and 12, I apologize. I skipped over that in all my favorite pitch about everything that's really outside the scope of this Twitter space that I had in mind. That 10 o'clock to 2 o'clock is the extreme range end of the daily range for your Forex trading pairs. It can extend to 1 o'clock, but generally between 10 and 12 New York local time. You can Finish your whole business there and be done. But as an index trader, you're entering the lunch hour. Now you roll out of, say you're a Forex trader and you want to trade the London session and New York session for Forex. And now you know that Forex goes a little bit colder the rest of the day in the US hours. Stop trading Forex, roll over into indices, trade the lunch hour. Where's the 15-minute stop? Where's the stops? Who's made money? Where are they leaving their stop? Because it's resting right in the marketplace, and the algorithm will gladly go down to it or go up to it, and there it is. There's a setup there. Then we get that last hour. That's making the high or low of the day for index futures. Not all the time, most of the time. Unless it reaches the daily or weekly objective intraday, and that will be the high or low of the day. If it has done that, then the afternoon last hour trading has to be traded from a scalper's mindset, looking for a 15-minute high or 15-minute low or 15-minute inefficiency above or below the marketplace. And that's your target, and be content with it. Does it offer you 5 handles? If it does, get it and be done. So I've walked you through a daily range, mentioned the characteristics. They're very generic. Do you think about price like that? If you haven't been thinking about price like that, now you should. Because in my mind, the inner musings of the ICT, when I'm watching the daily range form, I have all these thought processes in my mind, and I'm anticipating certain things based on the logic I've showed you and talked about here. I am not surprised. I am not taken back in a gasp when the market does something at any one of these times of the day. I'm expecting all this stuff. But anticipating it and entering the trade is 2 different things. In the beginning, you need to just sit still and watch. And you desensitize yourself. You remove all the doubt, all the fear, all the trepidation about you being able to do this. Oh, it's rigged, it's fixed, it's fake. He only shows you the winning trades. He this and that, nothing. You have all these excuses that you have to sort out. All that's put to bed when you start seeing it happen over and over and over again. When you start seeing it live, pan out to script. Whose script? Mine. Not Elliott's, not Sam Siden's, not Wyckoff. Mine. This market is absolutely predictable. But there's times when the market's going to be a little fickle. This is simply going to give you the setups that you like to see. New York session, optimal trade entries. London session, turtle soups that shift into 2022 model or optimal trade entry. Breakers really do well in London. Reversal market profiles in New York session. Once the targets on the weekly and or daily chart is met and reached, chances are we have an intermediate term high or low, and then a breaker can be forming there as well. You see how you can anticipate all this stuff? But you have to see these things. You can probably hear my son going crazy. He's in a tournament on his computer. We're playing a PC game. It gets nuts. But all of these individual times of the day, the silver bullets are always continuation. They're continuations of whatever is in motion at the time. If you can't determine what is in motion, don't take the silver bullet. How about that? How's the logic for that? It's simple, isn't it? When in doubt, stay out. So we've walked through time-based setups and models, how to go into the time of day, what time frame of the day, of all these different sessions. When are you going to set up shop? What's it going to be for you? Are you going to be a London boy? Are you going to be a New York shirt that trades? Are you going to be a lunch hour hero? Or are you going to be a silver bullet shooter, a gunslinger in the morning, or a gunslinger in the afternoon? Or are you going to be a Johnny come lately and trade the last hour trading? There is no advantage over any of them. They're all equally potentially profitable, and they all have their advantages within and of themselves.